Okay, picture this. You log in to check your Indian stock portfolio, all set to make a trade. But instead of that big green buy button, you see a notification that makes your stomach just drop. Account frozen. Suddenly, all your investments are locked up, and you have no idea why. Well, this isn't a glitch, it's a very specific compliance failure. And if you're an NRI investing in India, this explainer is going to show you exactly how to fix it right now.
So let's be super clear. This isn't just your app acting up. It's a real regulatory action. And you know what? It's happening to thousands of NRI investors who were, frankly, never told about the rules. For years, you might have been buying stocks without a single issue. And then one day, bam, everything just grinds to a halt. The reason is a compliance mistake you probably didn't even know you were making.
And this is way more than just an inconvenience. The consequences can be pretty severe. We're talking about potential penalties up to 2 lakh rupees, and it's not just your DMAT account. No, your mutual funds can get frozen right along with it. And on top of that, banks are required to report non-compliance directly to the Reserve Bank of India. It's a regulatory chain reaction that you need to stop, and fast.
So what's the actual culprit here? Well, it almost always comes down to 3 little letters. PIS. This is the one rule that trips up almost every NRI investor at some point. And understanding it is the absolute key to both fixing your account and making sure this never happens to you again.
PIS stands for the Portfolio Investment Scheme. Think of it like a mandatory gateway, a special channel created by the RBI specifically for NRIs to buy and sell Indian stocks. So, if you're using foreign funds, money from your NRE account, and you want the ability to take those profits back out of India, you must route that trade through the PIS channel. It's not optional, there are 0 exceptions.
Now this is where it all starts to make sense. You see, there are really 2 separate universes for NRI investing. The PIS route, over on the left, is for repatriatable stock investments. It requires a special PIS-linked bank account, and every single trade gets reported to the RBI. The non-PIS route, on the right, is for investing your India-sourced income from an NRO account. The crucial point here is that using the wrong route for the wrong purpose is a direct violation of the Foreign Exchange Management Act, FEMA, and it's the #1 reason these accounts get frozen.
So why was your account frozen? It almost always boils down to one of 4 specific triggers. First, the company you tried to buy has already hit its investment limit for NRIs. It happens. Second, you might have tried to use an old resident DMAT account for a PIS trade. That's a huge red flag. Third, your PIS bank and your broker don't match up in the system. Or fourth, you tried to sell shares through a broker that wasn't properly mapped. The system sees these mismatches and just freezes everything to prevent a violation.
Okay, that's the problem. It's complex, I get it, but the solution is actually a clear step-by-step process. So let's shift gears from diagnosis to the cure. Here is your 6-step plan to get your account back online.
All right, take a deep breath. This is completely fixable. You just need to be methodical. Here are the exact steps you need to take starting today. Here is your 6-step fix. First up, the document audit. You've got to get your PIS permission letter from your bank and give it to your broker. Second, DMAT redesignation. You must formally convert your old resident account to an NRI DMAT. This is absolutely non-negotiable. Third, a fresh KYC update using your non-resident status. Fourth is bank broker mapping. You need to confirm that your PIS bank is officially linked to your specific broker. Fifth, with all that paperwork finally in order, you submit the formal unfreeze request. And finally, step 6, once the account is active again, you can re-execute your trade. You're back in business.
Now, once you get compliant, there's actually some fantastic news. The Indian government recognized how painful this whole process was, and some recent regulatory changes have introduced massive upgrades to the PIS framework. These are going to make life much, much easier for NRI investors going forward.
First, the big one. The maximum stake that a single NRI can hold in a listed Indian company has doubled, going from 5% all the way up to 10%. This is a real game changer because it allows you to take more meaningful, long-term positions in the companies you truly believe in.
And it gets better. The combined ceiling for all NRIs in a single company has been raised from 10% to 24%. Now this is huge because it dramatically reduces the risk of popular stocks hitting their NRI investment cap, which, as we just talked about, was a frequent cause of those frustrating trade rejections.
And maybe the best part of all, the bureaucracy is pretty much gone. The entire PIS approval process is now digital.
What used to take weeks and weeks of currying documents back and forth to India now gets done in just 24 to 48 hours online. This just fundamentally changes the ease and speed of getting started the right way.
So, your account is fixed. You know the new rules are better. The final piece of the puzzle is making sure this never, ever happens again. Let's finish up with the most critical compliance rules you really need to live by.
Think of this as your do not fly list for NRI investing. The number one mistake, by a long shot, is continuing to use your old resident savings and DMOT accounts after you move abroad. You must convert them. Also, remember you cannot buy agricultural land, farmhouses, or any plantation properties. You're also prohibited from trading in segments like currency or commodity derivatives. And finally, you cannot have a resident Indian as a joint holder on your NRE account. Just avoiding these few things will keep you out of 99% of all potential trouble.
So you've done it. You've navigated the maze, you've fixed your account, and you're fully compliant. The regulatory headache is gone. But really, that just gets you back to the starting line. The real question now is, with these new, higher investment limits and a much simpler process, is your portfolio actually positioned to capture the incredible growth story that's unfolding in India? Getting compliant was about protecting your capital. The next step, that's about growing it. So, what's your move?